For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. G'day, traders. Stacey Burke from Stacey Burke Trading. Today we're talking about mastering the 3-day setups, the high and the low, and the market maker cycles. I got a lot of questions. There's still some confusion, day 1, day 2, day 3, but also identifying the true highs and lows. So we talk about previous days' highs and lows, but also understanding that when a market is moving higher, in some cases, it may not obviously have put the high in place yet. And the same thing goes for when a market is moving lower. And so that comes back to one of the questions was, I still don't know what you mean by multi-session setups. Meaning, I've talked about perhaps a US session high, an Asia low, or a US session high and a London low for a US session trade the next day. And we're going to study that today. So coming back using just some simple drawing tools, we can get a peak formation high on a day 1, day 2, doesn't matter. The next day can start and the market has put a low in place going into the close of the session, and the next day Asia can trade lower or into the Europe-London window. And we talk about other time frame traders being triggered into the market, but more importantly, understanding that the low is obviously not in place. And so coming back to sessions, we have US, we have Asia, and we have Europe-London. And so this is where we may have a low put in place. So we have a US session high and we have a Europe-London low for a potential US session trade back to the high of the day. So we have our high and our low. Now, some of the confusion arises when traders immediately, we have the close of a day and traders immediately look at the next day and just want to identify that as the high and the low of the day. And that is partly correct, but the true high and the true low are not in place yet, which is why I talked about the basic template is day 1, day 2, day 3 for a move down. But in some cases, the market may come up day 1, day 2, day 3 for a move back up. And so we'll look at some specific examples of this. But the point I'm trying to make is to be able to identify the true high. And as a market's trading, even though a new day may begin, we may not have the true low in place yet until another session. It may be Asia, it may be London, it may be the US session the next day. So we have a US session high of the day from one day, and the low is not in place until the US session the next day, which again talks about our 3-session setup. That could be an explosive move that could coincide with a news calendar. But again, they will trade back up to at least the most recent session high of the day. And that could be London, that could be Asia, that could be anything. But they may also come up and continue that move. It could be next day in Asia, so it could be US session low, and then Asia's session move back to the high of where that original move came down in the first place. Hopefully that makes sense. Let's take a look at the charts. Now you'll need to go through your own charts and mark them up and get in the process of being able to identify highs and lows. Now the Canadian dollar was a great example of a day one runner. And I talk about being very careful about trying to counter trend a day one instrument that's in a strong move. So for example, if you're in the London session, you may have been in this move. If you came along in the US session, there was a reversal trade later into the third hour of that US session, but obviously a very strong move up. So coming back to our original premise, where is the high and where is the low? Well, obviously the market has a peak formation low from the Friday-Monday rollover, and we have a peak formation high in the US session at the end of the Monday window. However, we've come down and put a peak formation low in to the close of that US Monday session. And at the beginning of the day, we have a peak formation high in the Asian session. So we're inside of the high. So in order for us to trade off the high or low of the day, we need to revisit one of these levels. However, in the new day, we have a peak formation high that forms in the Asian session. So coming back to our original high and low, we do not have a retest of that other than being on the inside. So again, trapping volume inside and getting traders to trade on tighter ranges in this consolidation. When the session begins in Europe, we have a vertical move to the high of the Asian session and the high of the day, which coincides with, again, our quarter level from the peak formation high of the US session on the Monday night. So coming back to peak formation high, peak formation high, peak formation high, double zeros, and quarter level. The vertical move, as you've heard me say, is the beginning of an opportunity for a pump and dump if it's to the high or low of the day. Now coming back to what we're talking about is identifying the true high and the true low. So we have a 25 pip high-low. The market revisits the peak formation made inside in the Asian session for a 25 pip move down into the low made at the end of the Asian window. Now again, we're inside. We have one peak, two peaks, and then a third peak heading into our US session window into the peak formation high. So again, working into the high, working into the high, working back up into our peak formation high. Peak formation highs above double zeros for a 25 plus pip move down and a pullback and a continuation. Now this pullback now and the peak formation high into that move down forms our new lower peak formation high. And again, you'll notice numbers. So working back into traders who are in the money. So number one, we're talking about trading in the 12 candle windows in the sessions if there is a setup. High of the day, session scalp in the Europe-London window at the high of the day made inside of the peak formation high in the US session. Peak formation high for a low-hanging fruit trade back through the low of the day into traders that are long from the Monday session. Double zeros and 50s. The market pulls back and makes a low heading into the close of the day on Tuesday, day 2. Now you'll notice when we talked about our original pattern was day 1, day 2. So getting longs in higher up on day 2. However, in this particular case, we had a big day 1, and then the market worked back up inside for a move down. Our day 2 then, however, has not gone through day 1. when that situation happens and we haven't taken out the high of day one, you have to be thinking peak formation high. We're coming down now to work into a low. Instead of breaking the high and getting day two longs in the market, they have come back down inside, and we're looking for a possible low of the day opportunity in one of the sessions. In the Asian session, they do not retest the low until the very end of the window and the beginning of the Europe 12 candle window. Now we have a low of the day opportunity. They've hit the low of Tuesday. Our first target will be the high of the current day. We said there was a peak formation high on the pullback on the move down. That's a peak formation high 25 pips above 50. If we're looking for a 50 pip box, we obviously have 75 and 25. Our low of the day came off of 25. Our level then, peak formation low, we want to get filled if you're trading the Europe-London window better than 50. So traders who possibly missed this first entry, they see this as a reversal opportunity from the low of the day, want to get filled better than 50. We have a peak formation high. Now if this market continues to trend, we can revisit the high of the week. This is the day two inside day three back to the high of the week. So we have our peak formation high of the week now. I talked about initial balance. Monday, Tuesday will often set one of the extremes 80% of the time. So now we have our high of the week and our low of the week, and now we're back inside. This is the classic setup for a trend trade continuation. Peak formations are down inside. We have a peak formation high in the US session. Asia is inside. We have a peak formation low in an upward moving market. The market goes to the high of the week at the Europe-London window, trades down through the higher level longs who are caught up high. You notice again the space. So for session traders, nothing in Asia. They come to the screen. There's a high of the day opportunity in the Europe-London window for a short trade back to the low of the day. Now the market comes down without taking out that low. We have our low bear, one push, two push, and we're into our timing window now into the US session. Three pushes down for a low of the day buy opportunity in the US session. Our target being high of the day, high of the week. Three pushes down, our triple bottom, W, whatever you want to call it, pin hammer, and a 1-bar stop. Our levels are double zeros and 50. So we want to get filled if you're trading this better than zeros. Our target obviously is the high of the week, high of the day, 50 pips. The market is making new highs. We have a peak formation low. This is our new low of the week, low of the day. We have a peak formation high in the US session. So we had a previous day US session high low. They extended that out in the London window. London high, US session low. US session high, US session low. Again, coinciding with the breakout of the previous day's high. We draw our lines across. We're in a market that's making new highs. This becomes our new day one. Peak formation low on the Wednesday, day one, day two, day three, making new highs. Our Asia window stays inside of that high without breaking it. You've heard me say this again. We break out through there. But when a market consolidates inside of a high or a low, it's coiling for a bigger move. The market breaks higher, pulls back and continues to auction higher into the US session. New highs, higher lows. So as we head into the close of the week, this market is making higher highs and higher lows. We have a peak formation high in the US session, a peak formation low in the US session. Now this market could roll over on Monday and go straight down. I have no idea. But when you identify the multi-session high lows heading into your session, you can have a thesis for whether or not that instrument is offering you a session trade, high of the day, high of the week, low of the day, low of the week, for a scalp, a larger move, or a trend trade. Now again, if you're focusing on one session, I like to short things. So if I'm coming in the US session, I'm going to be looking for peak formation highs, retesting the high, or peak formation highs in a broken down market for continuation trades for the low-hanging fruit trade. Now, day one, day two, obviously if our initial balance is that we establish an extreme that can potentially hold, we will often have potentially a buy low opportunity in the US session or a sell high opportunity in the US session on day one or day two, because those are the 2 days in most cases, sometimes a Wednesday, where we will be establishing the range or expanding the range in that pattern we spoke about with day one, day two, day three. So again, just coming back and going through the pound, again, you can walk through your own instruments. I'm looking for certain setups. So as I mentioned in previous videos, it takes me 10 minutes to scroll through to see which instruments are at the high of the day or forming potential peak formation setups for continuation trades for low-hanging fruit. So for traders who are trading Asia, same scenario. We have highs and lows from sessions. So we have a US session high-low heading into consolidation on the Monday. We have a market that during Asia breaks the low of the day, pulls back in our London window, and continues to expand the range in the downward direction. So we have a peak formation high in Asia. We have a new peak formation low in our London window. So for traders who can't see this, you need to walk through your charts and understand that when we get these 1, 2, 3s and the market continues to move lower, these are peak formations forming in that session the new lower high of the day. That's made in London. London makes a new lower high of the day. That is a potential area for a sell setup when we head into our next 12 candle window. So we have our peak formation low of the day on day one and a peak formation lower high breaking through the previous day's low in the London window. The market comes up in the US session, giving us our sell high opportunity on the smaller time frame, but again, levels, double zeros for a low-hanging fruit continuation move down, whether traders take the 25 or they hold on to it for a retest of the low, which we didn't get until the Asian session. That tells us that on day two, the market is continuing to go lower. So you'll notice the market is trading sideways before it breaks down. So we have other time frame traders now in the market, but our low of the week is not in place yet. So some traders will trade this as a trend trade, but what they're doing is going lower, which for traders that are looking for the buy low, we're not in that situation yet. The market is continuing to make new lows. It goes vertical in the London window and makes a lower high. Continues to auction back down into our low of the day. Now again, levels as we head into our new 12 candle window. Traders who are switched on had an opportunity to buy at the quarter level. We have trap volume down low into the low of the week for our extended W pattern. Traders who are coming later in the session have the squeeze, the short squeeze continuation trend trade to get filled below double zeros. Again, 1 bar stops for a move back to the high of the US window. Our multi-session setup, US, Asia, London for the US session trade day 2, low of the week, low of the day, back to the high of the day, double zeros and 50s. We head into day 3, new peak formation low, our high of the day, high of the session. The market trades back up into the peak formation high. We have a higher low, we have a peak formation high, and again, just coming back to levels, we have a 50 pip box between 25 and 75. The market reverses in the Europe-London window, and you'll notice that this pin reaches up into traders who are short on day 1, getting the Asian shorts peak formation high of the week. Nobody gets a free lunch. But more importantly, when we come back into our US session, we have our double zeros, 3 pushes into the peak formation just prior to our US 12 candle window. So traders who trade the end of that London window had an opportunity to sell high. The market continues to auction down into 50 before we get a peak formation 1, 2, 3 to 75. Again, for traders for the low-hanging fruit trade in our US session if they're trading the pound. So emphasizing here, learn to identify the true highs and lows. US session puts the low in, Europe puts the high in. They work back up into the high on day 3, break down, pull back for a 25 to 40 pip stop hunt continuation trade back into traders who were long on day 2. So peak formation high, we have a day 1 now, and you'll notice day 1, which is Tuesday, forms our low. Peak formation high, they work back up into the high. Day 3, break down. Again, giving us a thesis heading into the next day. We've broken down, potentially maybe retesting the low of the week. On our Thursday, peak formation high. The market breaks down and makes a lower peak formation high at our quarter level, 75. They trigger shorts at the low of the week at the bottom of our 100 pip box and proceed to go 3 levels of rise back into the peak formation high, US session high, London low, Asia's inside, peak formation high in London, retest and a breakdown above 50, our M structure inside of the peak formation high, for a continuation trade in the US session all the way back down, extending the low of the week into a new 100 pip box. The market continues to move lower. That tells us we break the low of Thursday, which again is not really a peak formation low. It's continuing to auction lower. That tells us that the low is not in place yet. Traders who short this with the trend on Friday, the market continues to move lower in a market that is broken down. If I'm trading the US session, I need to see a peak formation into that trend. We get that peak formation into 50. So again, the pump up, 1, 2, 3, smaller time frames. We're looking for a fill at, better than, or near the numbers for the continuation trade back through the low prior to the US session. So go back and walk through your charts, study these highs and lows, and understand that you will have multi-session peak formations putting in your lows and highs, in that it's not just merely often where the high and the low of the previous day are. Those are triggers for other time frame traders, but the real highs and lows can be made over multi-sessions for trapping volume, triggering other time frame traders. But coming back to our 12 candle windows, it doesn't matter what instrument you look at. You can look at indexes, you can look at anything. We can have, again, a US session low, a US session high. The market is inside during Asia and London. London breaks out, and then our US session peak formation, pump up into the broken down market, a lower peak formation high made in London. This is a 15-minute chart. Smaller time frames back into the breakdown level, previous day's low, for the vertical move down to major round numbers. So go back through your charts, traders. Hopefully that makes sense. If you master the highs and lows in these templates, the session trades, day 1, day 2, day 3, high of week, high of day, low of day, trend trades will make sense. Keep it simple. Enjoy your Sunday, and may the markets go with you.